Hello, 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 and a massive hello to everybody. Hope everybody's having a great weekend wherever you may be, whatever you may be doing. This is 50 Pips rocking and rolling here, 17th of September 2017. No trade calls, no recommendations, or response for their own stuff. We're here for educational purpose only. What's going on? I wish these videos could be a little bit more interesting, but there's just not a lot going on where the market continues to be strong and grinding higher. You can't stop it with a hurricane. You can't stop it with nuclear bombs. You can't, or threats of nuclear bombs. You can't stop it with missile tests. You can't stop it with data. So, it is what it is, right? I think what's the focus going into this week is really, you've got a central bank week, right? So apart from everything else that we'll be seeing is we've got the FOMC with a press conference on Wednesday, and then we've also got the BOJ, right? Basically, the way we're looking at it, the real mover is going to be the FOMC. So, is the FOMC going to come in hawkish? Is the FOMC going to throw a little curveball, and is it going to do something to stop stocks from rising? Is it going to do something to help strengthen the dollar? If not, it's going to be more of the same. The way this is working, we've been talking about it. So 2,500 on SPX, 6,000 NDX, 22K on the Dow, etc. Those are the bull bear lines, and you see that these steady grind higher are continuing. So it's the only thing you could expect is for the grind higher to continue, right? As we've been talking about on the ES or SPX, whatever way you want to look at it, 25 20s, 25, 30s if we get a sustained break and we start to get daily closes above the 2,500. Now, everything is still in trend, right? Everything's moving in trend. You see that basically all these moving averages are being respected, right? So there's very little to say or do. I think in terms of trying to look at how this could play out, if, and it's a big if the market is going to correct, you would not, unless there's something that aggressive that hits the tape, you would not expect it to correct ahead of the FOMC. You'd expect this to try and stay bid and try and grind higher all the way into the FOMC. And then if we're going to get some kind of correction, it will happen post FOMC into the end of the week. Now, keep in mind that on any move down, as it's staying in trend, all these moving averages are going to be strong support, but it's really all about the Fed. And so taking that into the DXY, because that's really what's interesting is, are we going to get some kind of correction on stocks? And on the DXY, this is where we're at, right? And we've been stuck here. Very, very important level. So I think any kind of strength that does not get a day close above that 200 week will likely find willing sellers to try and continue to press this back below the 91, 92 level, and that would indicate, more aggressive weakness all the way back into the 87s. But if post-Fed, hawkish Fed, the bulls can muster a close above the 200-week moving average, then we think there's potential to run $2-3 to the upside. What's happening on gold? Not an awful lot on gold. Our targets to the upside were hit, and the way we're looking at this is any retracement back into the 1,300 could be an interesting buy, but clearly we're not going to be chasing buying highs after we got into this nice move. You got the reversal, so everything is pointing to a move back into the 1,300. Now, again, I wish the update could be a lot more interesting because there's just not that much to say. In terms of euro, we're still stuck. We said if it's going to reverse somewhere, this is exactly where we'd expect it to reverse. So we have to wait for this FOMC. We have to wait to see how things play out. On a day close below the 200 week, we expect the 112, 113s to come into play as long as it's the same as that dollar index, right? Any move back up on the dollar index that doesn't close above the 200, you'd expect it to get sold. And on the euro, any move back into the 200 that doesn't close below, you'd expect it to get bought. You see, it's the same chart across the board. Shorter term, interesting dynamic could be on the yen, right? And we discussed this the other day, and what we said, we've been very, very bearish on the yen for a long time. And then what we said here, the fact that it couldn't break and hold below this area points to 112s coming back into play. So for us, it looks like we've got a date back into these 112s, which are going to be pivotal, and we'll see what happens. Day closes below could be an opportunity to get back short. Daily closes above, we could see a move back into the 114, 115. But you see it's exactly the same chart across the board as we saw on that dollar index, right? It's just about that 200. Cable, a lot of people asking about cable here. Very, very strong unwind into these highs. Now, it's extremely, extremely important for the bears to come in and try and step in front of this. If not, there is very, very little for this easily get back into the 140s, 150s. I know these are big levels, but there's just not that much going on. Sooner or later, we still think that Brexit worries will come back into play. And, once this BOE wears off, you'll start to see some selling. And clearly, we're not going to be chasing highs. We're looking for opportunities to sell. But for students of the market or students of cable on BOE days, on these data days, when you get a very aggressive move, it's fairly rare for it to reverse on the day or the following days. You just have to give it a little bit more time. But I think it makes sense to understand the context and understand the importance of this resistance that it's coming up against, right? And that's pretty much it. I think a lot of people are going to be looking also at crude. And it's been a tricky read, right? It's been a tricky read with also with all the hurricane news here. What it looks like is that it's trying to hold this move back down to complete a 123 extension back towards the 52s, 53s. We'd be more partial to try to look for selling opportunities, so we're just going to be sidelined for now, but we would not be looking at it as a fib. We're just looking at it as this 50 being a pivotal level. So if we get daily closes above, then it might be short-term tactically. You have to look for that move back into the 53s, 52s, but as long as we can't close above the 50s, then we're looking to try and trade some moves to the short side here. But not looking at it as a fib, just looking at the pivotal action around that 50 mark. And the other chart you really have to keep an eye out for into this week. And a lot of people are thinking this is probably the tell. We think it's very hard to read too much into this kind of market, but basically the bonds, right? So you see how heavy the bonds have been. In the bigger scheme of things, it's still stuck here. We're structurally bearish bonds, really, but here we're really stuck. So I wouldn't get too carried away simply because we're still stuck inside the previous month range, right? So just wait for the FOMC to come out, and I think that dollar chart is a lot more interesting. And one last thing, we've been talking about the fact that the NASDAQ is looking heavier than all the other indices, right? And basically it seemed, because of the weighting, it's down to Apple. So I'd keep an eye on Apple this week, because the way you're seeing that the Dow is very, very strong, the other indices are holding strong, and the NASDAQ is having a lot more trouble. Actually, let's get back to the NASDAQ, having a lot more trouble getting above all those pivotal levels that the other indices have managed to get back above. Let's get on the daily. Right, you see how it's kind of stuck. If Apple catches a bid, then it's going to be off to the races. But Apple might be the tell in terms of if you're trying to keep an eye on the chart of maybe if the NASDAQ is going to lead, you're going to have to see a lot more weakness on Apple. So as we said, as long as we're stuck inside this 165, 155, well, here's 156.50 kind of range. We just think it's a lot of chop, velocity of move inside range, and it doesn't mean an awful lot. But I think if you're trying to stay short the NASDAQ, if you see Apple close above 165, you really have to reassess that position, right? Because you might really get a complete melt up across the board. And if you're long, or if you're looking to stay short, this is the level you want to the downside. You start seeing closes back below, then this could really, really accelerate. We've got a gap to fill. I really think this is a particularly interesting chart to keep an eye out, especially in terms of that relative weakness of the NASDAQ versus the other indices. Okay, so let's see what we get. It's really a bit of a wait and see game. Unless we get a North Korea or Washington headline hit the tape, it's just a wait and see game until the FOMC and see how the market reacts and settles post. That's what it's all about. Okay, wishing everybody an awesome week. Thank you so much for the retweets. Thank you for the comments. Thank you for all the follows. As always, hit me up on the blog if you want me to post any chart. I've been trying to do a little bit more of those audio outlooks in the morning, morning radars. People seem to like that, so let me know. Okay, have an awesome one. Thank you. Bye bye.